Let's take the conversation forward. We have Rajeev Agrawal, Managing Partner and Fund Manager at DoorDarshi India Fund. Rajeev, great to have you with us. Good to be talking now that all the events are out of the way. And I think the market's wondering what next, because we've managed to go through the volatility, reclaiming all the losses. The Nifty is within striking distance of its all-time highs. But the question is, is there still more ammunition to take the market higher? I mean, what should we expect in the coming couple of months till we at least get to the budget and have more clarity on the policy direction?
Yeah, it's interesting. We are hitting new highs, and I think that's everybody's enjoying those new highs. In terms of what should we expect, I think the market has already discounted some of the expectations that were there with the new government. I think now the policy measures will drive how the markets will behave. So my expectation is that, like what we are seeing today, things will be more on the quiet side over the next few weeks. And once we start seeing some policy measures, because now the Q4 results are out, we have the election results out. So I think the markets will wait for the next set of information that we will start seeing closer to the budget.
Rajeev, let me ask you this. If you had some cash on you today and you were to buy a stock of fresh, would it be ABB or would it be Hindustan Unilever? Or both?
Oh, actually, unfortunately, neither of those are that compelling from a valuation perspective. I think ABB has run up a lot. And so, and Hindustan Unilever or Unilever India has always traded expensively. So we are in neither of those. But obviously, capex will be a strong cycle. I think all of us are expecting that. And depending on how quickly you discount the growth and how long you can expect the growth, I think you will have to take a call on ABB. Unilever India, I would be a little bit more cautious just because they have not really delivered and the valuations haven't necessarily come off that much.
All right. Hi, Rajeev. Good morning. This is Nigel on this side and good to have you in. Rajeev, you have a couple of interesting picks. People have been more bullish on Muthoot, but Manappuram has some valuation comfort. I believe that you're quite positive about them. And IIFL Finance as well. That's another one that's been quite volatile, but it appears you have bought that dip. So give us a rationale about some of these companies that you like from the financing space.
Sure. So Manappuram, I talked about it last time, Nigel, when I was on your show. And I think with Manappuram, the issue has always been that it never gets the multiple that its peer Muthoot gets. Muthoot is a much bigger sort of a company than Manappuram. But I think what is interesting in our case, why we like Manappuram, is because we feel that other than the gold loan business, which is almost 50% of the loan book, they have a lot of other areas that they're getting into, be it the MSME loans, be it the vehicle loans, be it the home finance, and obviously the MFI, the Ashirwad. So I think that corresponds to another 50% of the book. And what is interesting with that 50% of the book, Nigel, is that 50% of the book is growing a lot faster than the gold loan book. So we think that there is opportunity in that segment, primarily because Manappuram, as we all know, are in the tier 2, 3, 4 towns. And there is a demand for credit, and therefore Manappuram should be able to grow the book. One of the issues that we hear time and again from various analysts is the underwriting and how good that is. I think to a large extent that underwriting is offset by the additional NIMs that they have. So we believe if you look at today's valuation, Manappuram is trading between 7 to 8 times earnings. And the management, who was on your channel a few days back, have talked about a 20% growth rate. So,
all right. What in the financial space, what else do you like right now? And what are you finding value in? Because you said that neither capex, some of the capex names, nor some of the consumer names are attractive in terms of valuation. So in a market which is trading a little around 20 times, 21 times, where is it that you're finding value?
Yeah, no, so actually financials does seem to give us good value currently because we think that no matter what happens to the economy, we will need finance. And within the finance, given some of the regulatory actions and given some of the concerns, I think some of the valuations have come off. And, frankly, if you look broadly, I would say there's a lot of value across private banks. If you look at, for example, HDFC Bank or Kotak Bank, they haven't really done much in the last few years. So there is sort of value that exists out there. But we try to focus more on areas which are not necessarily as having as much focus. And that is where I talked about Manappuram Finance and IIFL Finance. The other area, which again in the financial space is pretty interesting, is the power finance segment. So we know that power, India is now around 260 gigawatts of peak power is what we have been recently at. And we will need to build out the base load. And, from a government agency perspective, PFC, REC will be the two funding agencies which will be helping with the build out of the power, both on the base load as well as on the renewable energy side. So I think that could be another interesting area to look at. I would just put a disclaimer here that whatever we are discussing, most probably we own them. And so we are clearly biased about all the names that we are discussing. So people should not take that as a financial advice.
Take that point, just before we continue our conversation, an eye on the markets. As on cue, the Nifty has faced resistance upwards of 23,450 right now. The high on the Nifty is 23,469. The index is now in the red, as is the Nifty Bank, just a little over 50,000, 50,028, 50,029 was the high on the Nifty Bank as well, and now is in the red. What's doing well? The mid-cap index. So the markets sold off from higher levels. Let's see. It's a lot earlier in the day than what it was, in the previous few trading sessions. So does that trade now unwind, and do we see, buying at lower levels for it to see another rally in the second half? Is a question that we'll have an answer to only in the second half. But for now, it seems like, that resistance at high levels is playing out.
Absolutely. It's banks and IT taking the market down, and then other big boys like L&T and Reliance, they aren't helping the bulls case either. They're also on the red side. So all put together, leading to this kind of a down move early on in the morning. Rajeev, I was hearing your answer on PFC and REC, and I go back to that original question. I mean, the reason I asked you about those two stocks was just to understand that incrementally, would you still look for more capex, old economy facing themes, be it power, be it capital goods, be it sort of infrastructure? Would you still look at those themes despite the run up, or incrementally would you be more inclined towards buying into rural facing names which haven't done that well? And if it is capex that you still want to stick to, then do share some names if you can of stocks that you like, because valuations are the biggest challenge here for investors.
That's exactly right. Valuations is a big challenge given how the markets have been doing. So I would say, rural theme actually is going to start playing out. It has been, as you said, has been a drag. So we think that rural theme will start playing out. Rural theme can be looked at in terms of the two-wheelers, but also in terms of the financials. They keep coming back to financials just because of valuation comfort. And the two names that we talked about, Manappuram and IIFL, both have significant rural focus. So I think, but the other one that one could look at is autos and auto ancillaries, because we think that two-wheelers will start picking up strongly, and that will help drive some of the opportunities there. The offset to that, of course, we have to look at is where they are trading, what the growth rate is, and therefore what can be our return expectations. Coming to the capex, I do think that power will have a decent amount of capex. Now, in power, the one area that we do like is renewable energy, because and we were recently talking to one of the power producers, and they were telling us that renewable energy, given how low the break-evens are now of putting on a new renewable power capacity, they are pretty bullish on that. So I think one could look at in renewable energy space in terms of either solar or wind. We are interested in one of the wind turbine generators in India. There are only two Indian wind turbine generators. One of them we like, and we own that in our fund.
Let me just ask you, since you're talking renewables, Rajeev, by any chance, do you own Suzlon?
No, the other name. So we own Inox Wind
Inox
through the promoter company, which is Inox Wind Energy, and it is the idea there is that ultimately Inox Wind Energy will do a reverse merger into Inox Wind, so there is some upside through that. But as you can see, both Suzlon and Inox Wind have a pretty big order book, and you can see that over the next few years, given the order book, one could easily project how the numbers will look. Now, both of these obviously have again run up quite a bit. So this is a position that we had for some time now, and something that we are continuing to participate in.
Rajiv, what about old economy? I've been tracking that space for a while now, and not so much of investor interest out there, but plenty is happening on the ground. We had a big deal that was announced overnight. Cement, if you talk about the capex theme, cement's going to be required. You talk about the housing team, cement is going to be required out there. Any exposure you'll have to the cement names over here? Because there are two sides of the spectrum. One is these larger names will get larger, pricing power will come about. The second one is these smaller guys, some of them are trading at good valuations. So some of these big guys will come and gobble them up, and then they'll re-rate. Your take?
No, absolutely. I think India is becoming very consolidated, to your point, across various segments. And in the cement sector, the big deal that we just talked about, I think clearly everybody is waking up. In the South, there was a natural sort of coziness across various players, and now everybody's waking up and saying, oh my God, we have a new person or a new big player in town. So I think it will be very interesting to see how that plays out. I think the opportunity in my mind is more going with players which are sort of in the medium bracket and who may want to get consolidated with the bigger players. So that could be an interesting opportunity. And either it could be in the South, Northeast also is pretty interesting. So I think there are these smaller players who may ultimately be good targets, and that could be one way to play the cement opportunity. Clearly, I think with the capex and everything, I would also expect that the cement will continue to do well. It's just that, the whole business model with cement is you have to be within a particular area around the cement plant, because, the cement doesn't travel well. Right. So you need to find out where the growth is and participate in those players.
All right, Rajeev, thank you so much for joining in and giving us a lowdown on all the sectors and stocks that you like right now. And